Hey guys, on today's episode, we are going to take a look at AMC, the movie theaters. We're going to take a look at their quarter one 2019, which they reported late May of 2019. The reason I chose AMC for today's episode is because I've been going to the movie theaters lately to see some of the big blockbuster films, and every time I'm there, the movies seem to be packed. I'm wondering if it's just for those movies or if that's the normal. So I wanted to take a look at how the company is doing and see if the lowness in the stock price makes sense with how the business is doing. So let's begin. So, like always, guys, this is going to be a two-part episode. On the first part, on this episode, we're going to take a look at their 10Q report. We're going to take a look at their earnings transcript and all the information they provided to us on their earnings. So like this, you guys can save the time and know where to look if you want to go look at more information. So let's start off with revenue. Revenue the first quarter was a total of $1.2 billion. That's definitely a lot of money, but unfortunately, it was declining 13.2% compared to the same quarter a year ago. Total revenues were lower in all categories and is driven by the softness in the first quarter compared to a strong first quarter in 2018. So I was taking a look, and one of the main things they're saying is the first quarter of 2018 had a big blockbuster hit on Black Panther, I believe, where this first quarter did not have anything to compare against it. The factors contribute to 12.2% decrease in total attendance year over year. So people are definitely going to the movie theaters less, and here we can see it's about 12.2% less. There was also a 4.8 decline in total average ticket prices. So that means they're selling their ticket prices at a lower price. But this, they say, is a deliberate implementation of both the A-list Stub members program and other promotion and pricing initiatives. We're going to talk about those other pricing initiatives and see. They've also seen a decline in IMAX and 3D volumes, primarily related to the mix of films during the period. So as we're going to see in a bit, IMAX and 3Ds have huge margins for the company, but it seems not a lot of films have been coming out in IMAX or 3D in 3D settings. Total food, beverage, and revenue per person grew per patron, which means per person grew 3.6% as they continue to implement strategic pricing actions and premium food and beverage initiatives. So that's good to know, right? Even though, all right, so overall, it does seem pretty bad for AMC. They have seen a lower decrease in attendance. They're seeing a decrease in price reflection, but they're seeing an increase of revenue per customers for their food and beverage, which I'm pretty sure they get a huge margin out of. So here, just more on earnings. As we can see, the announcement date was actually early May, not May, or late of May. So May 9, 2019. They reported earnings per share of negative $1.25. So we can see where the stock price is down. This is definitely a company that's losing money, and I normally don't take a look. Normally I don't want to invest in a company that's losing money, but we'll take a look at what's happening in the future. So, right, that's the thing that matters. What's going to happen in the future from now, and does it make sense to me? So the earnings per share surprise was it missed by 72 cents. That's definitely a huge miss. The revenue actual was 1.2 billion, and it revenue surprised it beat by 6 million. So 6 million is a lot of money, but compared to that 1.2 billion dollars, it's not a big revenue surprise. So like I mentioned, even with anticipated slow start to the year, they continue to be quite bullish about the full year prospect for AMC. They're currently expecting their 2019 adjusted EBITDA, how many people say it, EB, earnings before income taxes and dememorization and amortization, to exceed 2018 results. So again, that's okay, but to me, I'd like to see earnings after everything is projected. I all these operating expenses, income tax, amortization, all these need to be accounted for, and that's why I'm not a huge fan of taking a look at EBITDA earnings. I like to just look at full earnings. So it's good that they're currently expected to be higher than 2018 results. But that to me doesn't really give me any good good feels about AMC. So given the natural fluctuation in the box office between quarters, the management wants to look at full year results opposed to particular quarter. They want to take a look at medium to long term targets. And that to me actually makes sense, right? At the beginning of the quarter, there might not be as big hits as you have at the end of the quarter. So it does make sense that they would rather look at the year's value, at the year's results compared to a quarter to quarter results, right? Because you can have a bad movie in quarter one, which can mess everything up, or you can just have a weak list of movies coming up. So, like I mentioned, there was a theater decline. The U.S. industry as a whole declined a healthy 16.2% this quarter. So that's all the other movie theaters have gone down about 16.2%. Even though they are boasting that they are comfortable that AMC continues to outperform the U.S. industry box office. Domestic attendance per screen declined only 10%. So even though the whole industry is down 16%, AMC is down only 10%. That's a good thing, right? It means even though people are going less to the movies, AMC is still the leader in the platform, so more people are still going to them. U.S. food and beverage capture of $5.23 per person set a new first quarter record for the company. And they attribute this to the power of AMC's platform, where they're giving new initiative and enhancement to their theaters. They're using new apps and technology to communicate, engage, and sell to your guests. And the popularity of AMC Stubs loyalty program and AMC Stubs A-list subscription program. So like they did mention, right, AMC Stubs loyalty program. I am part of that. I think it's like $12 a year to pay for it. But they do get my information of what movie theaters I pay, what movie theaters I like. And before I go to the movies, they send me a message. Hey, do you want to buy anything? And we'll have it delivered to your seat or have it saved for you so you don't have to wait in line. So this frictionless use of technology to communicate with the customers, I think it's a really good thing that AMC is doing pretty good. The rest of the year, so accordingly, they're continue to be excited about the remainder of 2019, which they believe might be the highest grossing 9-month period in the whole cinema history. They're optimistic about the full year 2019 box office result and will be at least as strong as 2018 and potentially could be the first year ever that domestic box office breaks $12 billion. So they are bullish for the rest of the year. And the reason they're bullish for the rest of the years is that a lot of movies are coming out throughout 2019 for quarter 2, quarter 3, and quarter 4. Among many, for example, this past quarter where this quarter started, we had Avengers. Avengers came out just at the beginning of quarter 2. So Rocket Man, John Wick 3, Pokemon Detective Pikachu, Disney Aladdin, which did really good, Secret Life of Pets, Men in Black, Annabelle Comes Home, and Toy Story 4, all open in June. In Spider-Man Far From Home and Lion King opened in July. Spider-Man has done great. The movie theaters was packed when I went to go see that, and I'm pretty sure Lion King is going to do great. Then they have Fast Furious, Angry Birds coming out in August, Chapter 2 of It coming out in September, Joker and Gemini coming out in October, Terminator, Charlie's Angel, and Frozen 2 coming in November. And December, we have the strong Star Wars, The Rise of the Skywalker, Jumanji sequel, and the Andrew Lloyd Webber Cats, The Legendary Broadway Show. So they're definitely pretty bullish, and we can see they are definitely some big hits coming out. For example, me, I would like to go see Star Wars and Jumanji. I might be a fan of Terminator. The Joker might definitely get a nice amount. Chapter 2 of It. Fast and the Furious, not a big fan. But Lion King and Spider-Man are two I definitely want to go see, even though I went to go see Spider-Man already. So like they mentioned, there are some good hits coming out this year. So they are anticipating a very bullish year. So next, we took a look at their 10Q report, and I wanted to take a look at deferred revenue. And there was a specific reason why I wanted to take a look at deferred revenue. I wanted to learn how this company what this company called deferred revenue. Because, right, if they're collecting, we know that AMC's Stubs loyalties program and the AMC's Stubs, the new A-list program, are a subscription base. So if they're subscription based, in theory, they should be a deferred revenue, especially if they're collecting a yearly membership So it should be broken down over the years instead of them collecting all the revenue at once and saying that is their revenue, right? Because that would give you inflation. It would give an inflated revenue compared to what the total revenue is, because that revenue should be broken down by months. So here I just wanted to show in the bottom, it includes movie tickets, foods and beverages, gift cards, exchange tickets, and AMC Stubs loyalty membership fees. So it does include there. The only thing is, I wonder if AMC Stubs loyalty includes the A-list. That's one thing I have to take a little bigger look in, but they are deferring the AMC Stubs loyalty programs and the amounts of rewards accumulated through the AMC Stubs. So, and the amounts of rewards redeemed that are attributed to gift cards, exchange tickets, movie tickets for the AMC Stubs loyalty program. So that to me was the good news, right? It means that this company is not just grabbing all this revenue at once and it's going to show it to us at once in the balance sheet, in the income statement sheet. So it's actually showing to us as deferred revenue, and that's the best way to go about these types of subscription-based platforms. Now let's take a look at their debt. If we take a look at just compare to December 31st of 2018, so the previous quarter. So here we can see, right, this company has brought down by $400 million the total debt, and we can see a majority comes from the finance lease obligations. So right now last quarter had 560 million, and this quarter had 128. So that's the big chunk going down here. Big time debt. This company has nothing until 2022. It has 8.2 million dollars here, and then the next one for 2022 it has 852. For 2022, this company has about 860 million dollars to pay. If it can, we have to take a track of this for next quarter to see how much is paying down, because starting as of March 31st, 2019, it increased the rate of this by 2.5% plus a base rate of 0.75% as of March for the first one of 8.2 billion, and for the second of 2022 it's just a base rate of 4.73%. There's no increase of base rate on that so far. So those are the two biggest debt. Then it's 2023. It has two as well. Not as big as 2022. We have a total of about $700 million. Then we have 2024. Oh, wow. And here we do see it has something in 2019. In 2019, it has $1.3 million to pay. This company has money to do that. I wouldn't be worried about that. Let's take a look. There's nothing else in the near future. And actually, 2022 has another hit of $375 million. So it definitely has a lot of debt to pay for 2022. So we're definitely going to take a look at this in further quarters to see how it's doing paying this down. So this is something, if you are an investor, make sure you're taking a look at how the quarters per quarter is dropping down on this corporate borrowing. So next, let's go back to theater updates. As of March 31st, 2019, AMC owned, operated, or had interest in 636 theaters in the U.S. and 365 theaters internationally. In the first quarter, the company added premium recliner seating to 7 theaters in the U.S., including 2 new build theaters and 1 theater internationally. So that to me is pretty impressive, right? They're still building theaters, but only 2 new theaters throughout the whole United States in 1 quarter. I guess I'll have to take a look at a yearly base. But then now that I think about it, that's not too bad of a number. And I do appreciate that they're adding premium recliner seatings to the 7-year theaters, to 7 theaters in the United States. And as we're going to see, this company has been spending a lot of money lately, and most of the money is going to improving theaters as a whole. Premium large format offerings, so that's going to be PLF, premium large format offerings. So that's usually Dolby, 3D, IMAX. Offering continues to attract guests by delivering the best sight and sound experience. And the company added 4 new Dolbys at AMC screens, 2 new IMAX screens, and 1 new Prime at AMC screens during the quarter. So here we can see the charge, like I mentioned, right? PLF is a healthy premium. They get 70% price premium at Dolby's and IMAX, about 40 to 45% premium for AMC Prime, and on average 33% for 3D. They continue to grow PLF. A couple of years ago, they only had 155 PLF screens. Now they have over 350 in the United States. During the first quarter of 2019, 637 screens were converted to reserved seating. So again, right, we can see this company is trying to use technology to ease the transaction for the user. Me, I hate going to movie theaters that don't have reserved seatings. If they don't have reserved seatings, I'm not gonna go to that movie theater. So they are seeing that customers, most likely customers, are like me and don't want to do that, right? They just want to go there. They don't want to be there early to save a seat, to have a save a seat. I already want to know that I can show up 20 minutes late, skip all the trailers, and just go straight to my seat. The company is also on track to convert all 5,700 AMCs and AMC's dine-in and branded screens to reserved seatings by the end of the second quarter. So that's actually pretty impressive, and I do believe that's going to help out in the long term, right? Because if you do reserve seating, you're going to be able to track more of how the customer's behaving when they go to the movie theater. AMC Stubs. So this is the AMC Stubs, right? Their new program. Since it launched in 2018, the A-list tier. Oh, so never mind. So here now I know. Remember how we were taking a look at the deferred revenue? They mentioned AMC Stubs loyalty program, but we can see AMC Stubs loyalty program is a part of the A-list tier, is a part of AMC Stub loyalty program. So they do include this in the deferred revenue. So since this launch in 2018, the A tier has been successful and has already attracted more than 785,000 subscribers. So that's 785,000 times, what was it, $20 per month? That's a huge number of revenue, and it's far in excess of the initial internal expectations. So this program is doing so much better than what they initially thought it was going to do. They have 85,000 more subscribers than when we spoke last in the fourth quarter. So in just one quarter, they grew 85,000 more subscribers and roughly 180 more members in the A-list than we had at the beginning of the year. So we can see this program is growing pretty fast. During the quarter, the AMC implemented a 10% membership increase in 10 states and a 20% price increase in 5 states. So this company is being a savage right now and is increasing the membership of this program. They did take a look at high metro states. The 5 states, I think, were New Jersey, New York, California, and 2 other states that I can't remember. Based on the average frequency of the A-list members, their associated food price brings along guest attendance, their food and beverage spend, and the price increase in the first quarter. They believe the A-list program resulted in incremental profit in the first quarter of 2019 compared to estimates if the program had not existed. So they do believe that even though people are paying for this, we'll take a look at the number below, they're bringing guests in, they're spending more money on food, and they have an incentive to come and watch at least a movie where they're going to spend more money on the food. So they're saying that they do believe, obviously you can't really show the numbers of something that never happened, but they believe that this program is helping bring more customers than if this program did not exist. So the A-list frequency of visits per month, this is a really good number that I like that they share. In the first quarter was 2.6 times, right within their desired sweet spot of 2.5 to 3.0 visits per member per month. So this is their sweet spot. So to me, that means that if a customer that has this program comes between less than 3 times a month, this program is profitable. And they're seeing that this is what seems to be the case right now. They come about 2.6 times, which is less than that 3.0 times. So this means this program is doing pretty good for them. But admittedly, they say that this 2.6% was in a slow moving going quarter. But they also reported the average A-list frequency for April and the first 8 days of May, which included the first 2 weeks of the heavily attended Avengers Endgame. And it was still 2.6 times, exactly as it was for January to March. So it seems that even though there was a big hit in the movie theaters, right, we see that 2.6% still remains, even though such a huge film came out. So they're expected that this 2.6% still continues, 2.6 times continues throughout the quarter. So we're going to take a look at this. This is another number that we're going to take a look at throughout the quarters as the quarters come in. We now know that their sweet spot is 2.5 to 3.0%. So we got to take a look at these numbers. And if you're an investor, remember, take a look at this number. We don't want to see it going higher than 3%. All right, so next we're going to take a look. We're going to continue to look at AMC Stubs. The membership in AMC Stubs loyalty program is soaring. They right now have 20 million members compared to 2.5 million members household only 3 years ago. So this is AMC Stubs loyalty program. I think it's broken down into three different tiers. The first tier is tier A, where the person pays about 20 something dollars per month, and they can go, I think, X amount of times per month to see a few movie. Then they have the other AMC Stubs program, which is the gold program, where they pay, I think, about $12 for the year. And in reality, they just get some rewards program that if they spend X amount of money, they get points. And it also reduces, they take away some transaction fee. And the final program is the AMC Stub, just no fee cost program, but they still collect data from the customers. So this is good, right? They have 20 million members, households in the AMC Stubs. And here we go. Stubs is especially important as this allows them to collect unique data around the viewing preference and purchase behavior of their customers on an individual account by account basis, and then enables them to personalize the customer's experience as they engage with AMC, both inside and outside the theaters, before they arrive and when they are there and after they get home. So we can see, right, this is pretty scary things, but this company is collecting all this data through these applications, and it knows they're learning more about the customer and how the customer behaves and interacts with AMC. So that's done with AMC's program. I hope you guys learned a lot about that. I definitely did, and it definitely opened up some eyes on how this company is doing. Next, we'll continue to look. There is this new lease counting standard, and if you have watched some of my episodes, every company is doing this. So it does affect their assets and liabilities sheets, their balance sheet. So here we're going to see that this company is going to get about $4.8 billion in assets and about a $5.4 billion in liabilities when we take a look at the balance sheet in the next episode. So dividends still for real, in my opinion, right? When a company is doing bad, it has to stop with cash dividends until it gets back on its feet. And I don't believe this company should be paying dividends. This quarter, it paid $21.8 million in dividends in the first quarter of 2019. So we're going to still see some more dividends. This company definitely needs to stop with its dividends for some time until it can get back on track. Next, we can see investor stake growth. They did have a day where they talked to the big banks and to explain more of what they're doing. They detailed view of capital expenditure for multiple years and set a market on the ground-driven market to think about medium to long-term financial performance for AMC with targets that they believe are achievable. They do mention that growth is not always a straight line, but they firmly believe that over the 3 to 5 year timeframe, AMC can generate revenue growth of 3 to 5% per year, or 1 to 2% in the excess of expected industry box office growth. So that's 3 to 5 years, right? That's in 3 to 5 years, they do believe they can generate revenue growth at a nice, healthy rate. And like they mentioned, they do believe that these are extremely achievable. So here we can see, as for CapEx, they're having all gone through much of the capital investment cycle domestically. They believe CapEx will settle in over the next 3 to 5 years to a more normalized CapEx investments level of $250 million to $300 million annually. And that 250 and 300 million annually is going to be broken down in 150 million in annual maintenance of capex. So that's their movie theaters, the seats, everything, and 100 million to 150 million per growth initiatives, especially those internationally. Note that this 250 to 300 million annually that they see is going to be considerably lower compared to the 500 million 2 years ago and the 450 million that they anticipate to spend on this year of 2019. So they encourage us to hold them liable to these targets. So right, like I mentioned, right, they're spending a lot of money on CapEx investments. So this means that they're spending a lot of money and making sure their movie theaters are up to date, improving the seating, and doing everything to make their movie theaters closer. But once they do all this, they don't believe that they're going to be spending that much money, and it's going to go down to 250 to 300 million. And like they mentioned, 100 million to 150 million is going to go to growth initiatives, and then the other 150 is going to go to just maintaining their movie theaters. They do have a new top dog. They have a new independent director joining the AMC boards of directors. His name is Adam Sussman. As part of the strategic investment from Silver Lake's last September, they agreed to elect a director with significant technology experience and knowledge. So this Adam, he is a Harvard MBA. He is currently the general manager of Director Digital and Geographics at Nike's with over 20 years of digital consumer experience at major global brands, including Disney, Electronic Arts, Zynga, and they look forward to his valuable ideas and contributions to AMC. So that's pretty cool that they have this guy who's worked with all these other past industries in the past. So that's definitely good news on this guy being hired. There's one question in the earnings transcript that that really grabbed my attention, and I believe it's definitely a great attention for you guys, a great question for you guys to hear. So there, I forget what bank asked this question, but they wanted to know more about pricing and how AMC can increase pricing to again collect more revenue. And was it possible to even do this? Would the customers allow this to happen, or would it drive too much pricing away? As a customer, right? As a customer, I hate to read this question because I can see how much money these people want to pull out of us. But as an investor, this makes a lot of sense. So first, they definitely have a lot of plans, and you guys are probably going to be shocked with all the stuff they're doing. So 1.5 years ago, a year and a half ago, they introduced weekend surcharges, which are doing fine in the United States. So right, if you take a look at buying movie theaters on the weekends are going to cost more than buying them on the weekday. But this is doing perfectly fine as customers are paying fine. They have not seen any negative effect for this. They have created the first ever pricing department in the history of the movie industry. And the pricing department is going to look at the prices they charge at every single theater on a constant basis, and they're going to move the prices up or down depending on the best way to optimize pricing for that specific movie theater. So again, that's pretty good. Again, they're collecting all this data, so they'll be able to optimize pricing at the best thing. In the past 12 months, they've had two major pricing actions. The first one is called Discount Tuesday, which turned Tuesday into the second biggest attendance day of the week. That's actually pretty impressive. And look, this is this tricky part that I'm talking about. When launched the program last year, they called it $5 Tuesday because they would sell tickets for $5. They now renamed it to Discount Tuesday at the beginning of 2019 because they quietly been taking price increase on Tuesday, pushing Tuesdays from $5 to anywhere between $7 or $5 to $7, depending upon the movie theater. So yes, it is a decrease between current movie theaters, and obviously this company does not have to do this. But you can see how they pull in customers and then change things around. And then of course there is the A-list, which like we saw before, they dramatically changed the pricing philosophy that affected so far 7,807 of their happiest customers. So remember, we saw that 10% increase and then that 20% increase in 5 states. They're continuing to think hard about zone pricing. So zone pricing is charging different prices for different seats, and they already do this in Europe. So that's pretty. We can see, right? You can see that they're doing this reserved seating. All these movie theaters are going to have reserved seating. So now they're going to be able to do zone pricing. With zone pricing, like they say, they're going to charge different prices for different seats. They're also thinking about doing blockbuster pricings, where they charge different depending on the title. So for a big hit, they're going to charge more money, and for a smaller unknown movie, they're going to charge less money to have more people coming in. And in my mind, right, as a customer, this seems pretty messed up, right? Doing all this. But again, this is the customer, and this is America, so they can do whatever the hell they want. We're gonna see how the customers react. But this makes sense, right? If you go to a Broadway show, all these are already affected. The seats depend in a Broadway show. If you go to watch a play, a Broadway, or a concert, you pay more if you sit on the better seats. You pay more for a person, for an artist or a play or a show that's more known compared to an unknown artist. So right, everything here makes sense. They're also looking at timing of pricing. So they're charging more at the beginning of the movie's run. So when the movie first comes out and when it first hits the theater, they're planning on charging more for that movie, and they're trying to charge because that's when the movie hits its peak. And then when the movie is about to start fading out of movie theaters, they're going to charge less. So again, this is not during peak time, so it's just going to get people to come watch movies that did not do that good or are about to leave the movie theaters. And they give us an example for opening weekend of Avengers. they charged anywhere from $15 to $51 for, and let me say that again. They charged anywhere from $15 to $51 per ticket for the opening weekend of Avengers Endgame, based on where you sat in the movie theater. This was a specific movie theater in London. Imagine paying $51 to go see a movie. That is ridiculous. Surprising is something that they believe they understand a lot at AMC, and they are already taking a lot of actions over the past couple of years and will continue to be active area of revenue opportunity for them going forward. So now let's take a look at future earnings per share. So right now for this year, the company is estimated to have a negative $67, 67 cents earnings per share. And then for next year, a negative 3 cents per share. So we can see it does seem like the analysis believe this company is going to go positive in the future. It does seem in 2020 this company will be breaking even. I do not like to invest money in a company that's losing money. So at the moment, I wouldn't go all in on AMC. No, not all in. Like I wouldn't invest my normal investment amount on AMC because it is a company losing money. But to see, it can definitely be one of those companies that if they do transform the whole company around, the amount of money coming in, going to the shareholders will be dramatically high, right? Because right now it's a dead horse, and if this dead horse can come back to life, it can show a lot of results. So I personally, I'm pretty torn. I kind of like the way they're going around things. So if we take a look at the balance sheet, at their financial statements in the next episode, and I see things are not really as bad as they look, or if this company definitely has a nice amount of cash in it, then I can see why someone would want to invest in this company. So like I said, December 2020, they do expect to have at least almost a flat earnings per share estimate. And let's take a look when they wanted to. They were talking about decreasing the money, and that was between 2 to 3 years. So that would be about 2021 and 2022. So between 21 and 22, we would have a nice, probably positive earnings per share, but probably not by much. So that would be it for today's episode, guys. I think this was one of my longest episodes, but I did find a lot of information for you. So I hope you guys enjoy it. Take care, guys. Have a good night, and see you next time.